Is it starting? Hey, good afternoon, everyone. My name is John Gemini, EVP of Production here at Angel Oak Mortgage Solutions. Hope everyone's having a great day. Um, we're going to go over HELOCs, closed-end seconds, and if we have some time, we'll talk about cash-out options also with all of our other great programs. So we'll let everyone log in, and I'll introduce our two subject matter experts, and hopefully everyone's having a great June. I'm playing a little bit of a away game, so I might have some technical difficulties, also some verbal ones. So, but we'll get started and introduce the subject matter experts here. Just some housekeeping. This is going to be recorded. This is not pre-canned, as you can tell. And everything we're going to do today is from our website. So this is being recorded. We will get this out before end of day tomorrow. And if we don't get to all your questions, we will have an account executive reach out to you and answer your questions. That's one of the issues I'm having right now. I can't see the question queue. So hopefully we'll figure it out as we go. Give it about another 15 seconds and we'll get started here. All right. All right, let's get started. Again, my name is John Gemini, EVP of Production here at Angel Oak Mortgage Solutions. Been with Angel Oak for 11 years this month, so happy anniversary to me. I'm going to start with the West Coast here, or west of us. Chris Taylor, please introduce yourself.
Hi, I'm Chris Taylor. I'm in Denver, Colorado. I've been with Angel Oak 9 years, and it's hard to believe it's been that long. Excited to be here to talk about HELOCs and closed-end seconds, a product we've been excited to get, and now it's working great. So,
yeah, we've had it all. I think Moses and I were talking the other day. It's been about a year and a half, so it's been a great product for us and for all of you out there. So, Jack Stevenson, hanging out here in Miami with me too. So, Jack, please introduce yourself.
Thanks, John. I'm Jack Stevenson, a senior account rep with Angel Oak. I've been with the company for about 5 years. Just very excited to talk about HELOCs and how much potential you guys have in your own markets. So
yeah. So if we can launch a poll before we get into a deep dive into HELOC closed-end seconds, we're also going to show you. We have a blended rate calculator. We're going to show you. We have a quick quote, how you can get rates any time of the day you want. And then we're going to talk to you about how you can market yourself. So if you can launch the poll, have you originated a HELOC or a second lien in the last 12 months? And while we're going over that, there's so much equity in homes these days. 40% of the homeowners own their homes outright since 2022. 33 million single family and condo mortgages are free. 31% increase over a decade. There's so much money out there tied up in home equities. And there's people out there with I think it's 63% have a rate of 2.5% to 4%. So these HELOCs give the opportunity for everyone to tap into that equity. So let's end the poll here. All right, 61% have and 37 have not. So hopefully the ones who have, we're going to teach you a different way and a different income stream to get that. And then for the 37% that have not, hold on tight. Jack and Chris are going to take you through how to make more money without tapping into, without hitting that first lien position. So let's get started here. Jack, you're going to cover the HELOCs here. So everything we're doing is from our homepage. I'm going to move this over here a little bit. Again, this is the Angel Oak home screen. So these are all of our great programs. So Jack, get us started on the bank statement HELOC.
Yeah, of course. Thank you, John. Yep. So we'll just start from the top down with the business. Basically, the bank statement HELOCs, obviously, we rolled out to help serve your self-employed clients who can't qualify at a local bank, or maybe they're self-employed, they just don't show enough income, they have too much write-offs, no one wants to take a risk on them. Okay, so ultimately we rolled out the bank statement HELOC, and this product is to fill that gap, fill that void for those specific clients. Okay, so what we're going to do with the bank statement HELOC, we go up to $750,000 with a business bank statement review. Okay, we can do 12 or 24 months, and then we're going to do all the work for you on our end. Okay, we're going to calculate it. We have a system to calculate it up front within the first 24 hours to spit out qualifying income and make sure ratios are in line for you. Okay, $750,000 with a business bank statement review and $500,000 with a personal bank statement review. Okay, so basically, and we go down to a 660 FICO. With a 660 FICO, we're up to 400,000 in loan amount. With a 680 plus, we basically can go up to 90% CLTV. Okay, so with a 680 plus, we're extremely aggressive, right? If you have a below a 700 FICO score, we're going to be able to, we can still go up to your 90% CLTV. Okay. We have a first and a second lien HELOC option. So for the individuals that want to use the technicality standpoint of the HELOC, so draw funds, pay back, draw funds, we can still just do a first lien HELOC for those specific borrowers. Okay. We allow on owner occupied second home and investment properties. Okay. So ultimately, on a second home and investment, we can go up to 400,000 in loan amount and up to 80% CLTV. So that's going to be your limits for second home and investment properties, both for full doc and for the bank statement HELOC. Okay. Owner occupied, we're a little bit more aggressive, obviously up to 90% with a 680 FICO score, but FICO score starting at 660 on this product. Okay. Interest only is during the draw period. So we have two options for the business bank statement HELOC and personal bank statement HELOC, and that's a 3-year draw, 12-year repay. During the draw period, it's going to be interest only. Yeah, if you scroll down a little bit, John, there you go. You'll see the 3-year draw, 12-year repay option. The draw period is going to be interest only. So for the 20-year option, it's going to be a 5-year interest only draw, followed by a 15-year repay for a total of 20 years. The 25-year option is only available for full doc borrowers. It's going to be a 10-year draw, followed by a 15-year repay. Okay. Texas, we cannot do owner-occupied properties for the HELOC. And then in Tennessee and Maryland, we can only do investment properties. Okay.
We're working on the Texas, though, promise you. So
a lot of equity there.
yes. All right, so Chris, let's go to, we do have a blended rate calculator after Chris goes through the second lien, highlights of the second liens. And I'm going to apologize in advance. I still can't see questions coming in the queue because of technical difficulties. So hopefully Jack and Chris are, hitting on a lot of your programs. So Chris, let's talk about the closed-end second.
So we have a closed-end second option, and that really is for a borrower that might want to just have a set term, 30-year fixed rate that doesn't change. You can't get an interest only, and you can't draw on this line. It's just a one-time loan to tap into the equity, and we can do that on a full doc, or we can do it with 12 or 24 months business bank statements. We allow cash out, a rate and term, owner-occ investment properties, or second homes. Keep in mind that, again, this is a 30-year fixed rate. It doesn't float. It's not tied to prime like the HELOC, so it's probably good for the borrower that just wants peace of mind for a fixed rate. We have basically a 30-year fixed, 20-year, 15-year available with this loan. The loan amount goes up to $750, and the minimum loan is $125 on this product. So again, it's just good for stability and just knowing what the payment and the terms are on the loan. We also allow up to 50% DTI on this product.
Yeah, so some questions that we've gotten a lot in the past. Jack, talk about the appraisals and AVMs, if you don't mind, talking a little bit about that.
Yeah, of course. So we do have an appraisal waiver option. Now, we have certain criteria to meet in order to waive the appraisal. In order to waive the appraisal, we're going to need a $400,000 or less loan amount an 80% CLTV or less. And then we're also going to need an 80% confidence level or greater. Now, the confidence level you're not going to know about right when you submit your pre-qualification. We're going to run an AVM for you. So if we get an 80%, we're going to let you know and send out the approval with an appraisal waiver feature. Okay. So, and obviously that's something that is going to help a lot just with just to save your borrower $500-$600 on an appraisal, right?
Yeah, no, that's a great feat. Anything else, Chris, that you've seen regarding AVMs or appraisals with HELOCs or closed-end seconds?
Well, I just think that the AVM is kind of a game changer in our business. It speeds the process up. We know right away. So when you're pre-approved for credit, value, and income if it's a bank statement loan, which really, eliminates a lot of the issues going into underwriting. There's not that much to do. So
Yeah, Chris, you bring up something, and usually when we do a deep dive into bank statements, we talk a lot about, the process. So talk about, the 1003 a little bit and talk about the process and how quick and smooth it is, from getting
so
the bank statements. Go ahead.
I feel like Angel Oak, we have always had our signature pre-approval where we do most of the work up front. We try to give you a solid answer up front to eliminate the future, potential issues that could come up in underwriting. We always pride ourselves, I believe, on not only pre-approving the loan, but if we need an exception, being able to get that up front so that by the time you go to underwriting, and in the case of a HELOC, you just have most of the big issues behind you.
Yep.
And we let you do it without any logging in. You can price the loan and you can upload your bank statements, credit report, 1003. We like a complete 1003 so that we can, give you a really good quality pre-approval.
Yeah, and I think you're being a little modest there, Chris, because you are basically pre-underwriting the file. You're looking at he's got 9 on this call. We have about 26 years just of experience at Angel Oak, right? So we've got you're looking at the 1003, you're looking at the credit report. We have a team of experts that's all they do is calculate the income. So you've got the income, you've got the credit approval, and like you said, Chris, if you're not 1,000% sure, you're running it to a help desk before you're sending out an approval, which I'm finding out more and more and more. A lot of our competition doesn't do that, so we're doing that up front. We do that not just for HELOCs and closed-end seconds, but we do it for the bank statement, the first lien bank statement. We do it for the debt service coverage ratio. So all that's done up front. It's just the finer tuning of a full underwrite once it comes in. So
and John, to continue off of that, it's 1 day turn time for that too. So like we're going to give you a full approval, but just make sure you disclose everything to us because we can't prepare for what you don't disclose to us up front. Okay. So we want a clean 1003, make it as clean as possible, and we'll give you a very accurate answer based off of the information you disclose to us.
Yeah. So, again, I cannot see the question queue. So please, we do have someone answering questions that get entered here. So hopefully we're getting those questions answered for you. And if we don't answer all those questions, your AE will reach out to you. And I just lost my train of thought, Jack. You were going somewhere.
80% draw. So someone had a question on the draw. So 80% is required at funding. So, they're going to have to take out at least 80% of the loan amount. Now, your pay will be off of the loan amount, though. Okay. So you'll get paid based off the loan amount, but the borrower will have to withdraw at least 80% of that loan amount at funding.
So, Jack, if you're able to see the question queue, then feel free to fire questions at Chris, and yourself. So
Yeah.
I don't see it.
Okay.
Okay, so I see. Looks like investment properties. Can we do 4 unit? No, we can only go up to 2 units on investment properties for the HELOC product. 2 unit max.
You should be moderating.
Minimum is 125,000 in loan amount on the HELOC product. Minimum draw 80%, so 100,000. So that's correct. Someone in the chat, D. We can go down to 100,000 for the draw on the minimum 125,000 loan amount.
Cool. Well, let's jump over and show the blended rate calculator, because I think what people fail to realize is and I've already put a scenario in here. So let me know, Jack and Chris, if you can see my screen here. So
Yes.
most homes since 2019, most homes have appreciated well, probably 40, I think it was 47.9%. So I put a property value in here of 500,000 with monthly taxes of 1,000, $250 in monthly insurance. So we have that's the first mortgage. The loan amount is $250,000 with a rate of 4. Like I said, 63% of the homes in the U.S. locked in over, like as Eric Morganson would say, generational rates during the pandemic. So here's a 30-year fixed. This is what their monthly payment is at a 50% LTV. For the second lien, I went in and put 125,000 with a 10% rate, and we'll show you a quick quote here in a minute, with a 20-year fixed. Here's your potential payment, and then here's your total payment. So you have just over $3,600 total payment, combined 75% CLTV with a blended rate of 6%, which is pretty awesome. So, and if you look at, I've got some other stats here. Credit card balances over $1 trillion with an average interest rate of 27%. There's, Americans paid $120 billion in credit card interest and fees in 2022. So,
and John, one thing I want to touch up on too with that is that for the HELOCs, there's no restrictions on how the funds can be used. And I really want to emphasize that. So your self-employed community, they're always trying to scale up their business. They're always trying to grow and expand. Maybe they want to hire employees. This HELOC product is a perfect example. Instead of going to Shark Tank, or instead of going to, some kind of VC firm, they are their own VC company. They can tap into this equity, pull out the equity, and grow and expand their businesses. They can also use it, obviously, to pay down debt. There's no restriction. They can use it for anything. They can take it out and then use it as a down payment for a DSCR loan. Okay? Like, again, there's no restrictions on how these funds can be used.
And for those borrowers who have multiple properties, they can have multiple HELOCs.
Exactly.
Yeah.
No
Which
restrictions.
is great, because a lot of borrowers have multiple properties. I have one in my pipeline as two right now, so it's great for that.
yeah, and I'll do a little tease here. I think within the next 30 days, we're going to have a DSCR closed end second.
Mhm.
Fingers crossed. This is being recorded. So,
Pressure's on.
pressure's on, not me, Travis. So, but so that's coming down the pike. So, there's a little bit of a logjam right now with the real estate community, right? But these are all tools Angel Oak is bringing to you to help you fix that logjam a little bit, maybe. So, Jack, Chris, those are great suggestions. So, let's go show the blended rate calculator. We're 20 minutes into this. Do you guys want to, Jack? Do you want to talk? Let's talk. These are just to help people who have really low first liens. Jack, let's just talk a little bit about our bank statement loan and how right now 35% of the loans we're closing on our bank statement are actually full-blown cash outs. And you might need maybe more than $750,000, Jack. So let's talk about our bank statement loan and talk about, the cash out options, right?
Yeah, of course. So just with the bank statement, we can go down to 640 up to 70% LTV, up to 2 million in loan amount. So you can have a 640 score, still tap into 70% on your primary residence, going up to 2 million in loan amount. I mean, that's extremely aggressive, right? And obviously with the bank statement, one unique function we have with the bank statement is it just has to be delisted from all platforms prior to the application date. Okay, So again, in some specific markets of the country, if they have it listed and then they take it off, you can still tap into your equity. Just has to be delisted on the first lien bank statement program. Second lien requires 6 months seasoning on that. But we go all the way down to 640 score up to 70%. And then with a 700 plus FICO, we go up to 80% CLTV up to 3 million in loan amount on a primary residence. We can also obviously cash out on investments in second homes. And that's going to be 700 plus FICO up to 80% CLTV all the way up to 2 million in loan amount.
Yeah, and we have the interest only payment there. So you talk about your self-employed borrowers who like flexibility, right?
Right.
So this gives them that flexibility, Jack. So Chris, let's get anything else, Jack, or Chris, anything else regarding bank statements and cash out?
Well,
No, I
bank
think
statements on
yeah,
investment property, second homes too. So
Yeah.
remember that.
yeah, second homes and investments, if I didn't touch up on that, yep, 700 plus FICO up to 80% CLTV, all the way up to 2 million in loan amount for your second home and investment properties.
Yeah, so we're talking about cash out. Today's all things cash out, right? Liquidation, just get money in your pocket. So Chris, talk about the DSCR or debt service coverage ratio loan and specifically hit on, the cash out options, please.
So, and I'm seeing a lot of these loans right now. It used to be where we had probably 70% of our loans are bank statements. Now it's definitely like half are DSCR loans. So we can do, and we're doing a lot of cash out right now on multiple properties with borrowers, but the DSCR loan is a minimum FICO of 680. Of course, on a purchase, we can go to 85%. Remember that anything over 80, we want to have a cash flow of 1 or better. But we have just a myriad of options now with DSCR, from doing short-term rentals, and we're seeing a lot of those condotels. We can do now below a 1. So DSCR, debt service coverage ratio, basically means the rent and the mortgage payment would be 1 or better, and if that's our category. But now we allow below 1. And we have an unlimited no ratio option on DSCR loans as well. So you can actually get a DSCR loan that doesn't cash flow now and get cash out on it as well. We're seeing a lot of those. We don't look at employment. We don't look at any income on the 1003. So it's really all about cash flow of the subject property.
Yeah, I know. And again, we're talking all things cash out today. So it's really, we're going to have other deep dives in July, specifically towards bank statements, debt service coverage ratio, probably throw in an I-10 because we just rolled out bank statements for I-10 borrowers. So, and probably a debt service coverage ratio, second lien specific. So look forward to, follow all the emails. And Chris, you were talking about, or I'll go back to Jack here. Jack, you have a how many pack in-house on this?
Is Travis listening? It was a 9-pack that closed. So yeah, 9 loans. So again, pretty much an aggregate per borrower will go up to about 3-4 million. Anything beyond that, just case by case exception basis. Okay. So ultimately, it's just per borrower on our books. It doesn't matter if they have 20, 30 properties financed through Fannie and Freddie. Well, Fannie and Freddie might only go up to 6 to 8, I believe, properties now. Doesn't matter. We have none on our books, right? So bring them our way. We'll be able to take up all of those excess clients that Fannie and Freddie cannot help with.
I would say too that once a borrower closes, I think they get that confidence, and we end up with a lot more loans from that same borrower, that same loan officer. So, once they realize that they don't have to go through all the hoops that they had to go through on a full doc loan, it becomes really easy for them, and they have, we end up getting a lot more of that same borrower, which is great.
Yeah, and usually it's a seasoned investor, right? Most cases, this is for the first time investor too. I catch myself talking mostly about a seasoned investor, but they do come in multi-packs. So if you're out there and you have your database, sorry, I just dated myself there. If you have your database, your CRM out there and you closed an investment property for a borrower, reach back out to them. This is a way for you to create new business for yourselves. So 37% had not done a second lien. You don't have to do a second lien. You can do it cash out of an investment property, cash out of an owner occupied property. And here's just some examples of how you calculate the debt service coverage ratio.
And John, to touch up on, even going back to the DSCR cash out with a no ratio at 65%, something else to keep in mind too is, we have an unaudited P&L program for business owners that goes up to 70%. And so if you have borrowers who have a 720 plus FICO, we have no bank statement verification with an unaudited P&L prepared by a tax preparer. And we'll take that, use the net income on it, and we can go up to 70% on an investment property, right? For another cash out option. So if they need a little bit more equity and have a business, we can take the net income from an unaudited P&L prepared by a tax preparer to tap into their investment properties equity with no bank statement verification up to 70% LTV.
Yeah, great. Jack, just see if there, like I said, I cannot see see if any questions have come in the queue, if you don't mind.
Mo has been, it looks like, answering on the side, just about all of them. I mean, we can.
I usually like seeing them and asking them out loud. So
Does the tax preparer need to be a CPA? It just needs to be a licensed tax preparer.
Okay.
Licensed accountant, licensed tax preparer.
I've seen a lot of short-term rental cash outs too, and we can use their rent receipt, from Airbnb and VRBO and all those places too.
Chris, you bring up a good point. Let's talk a little bit about the short-term rental for purchases, even how we use it.
So for purchases, it's awesome because we can do an AirDNA report and we know upfront what your ratio is. So that's the only way I think we can do that now, but that's pretty cool. When you go into underwriting, you already know what your DSCR ratio is.
Exactly. And I think that's huge for that purchase market. We can't do it on a refi or a cash out, but on that purchase market, I know we're talking cash outs here today, but on a purchase, knowing that up front, and we're not taking a haircut of that. You're nodding your head, Jack. Go ahead.
Oh, well, I was just going to say, we're doing cash outs, but they almost go hand in hand for, investors trying to build a portfolio of properties. We got the purchase with AirDNA, but, tap into your equity, pull out a HELOC, and then use it as down payment for a DSCR purchase with AirDNA. They go hand in hand. And then obviously when the time comes, tap into that equity and use it elsewhere. So again, I think they almost go hand in hand, even though, we're focusing specifically on cashing out right now.
Right. So let's Chris, Jack, you're going to take us through our quick quote. So let's go back to the homepage and share with our audience how they can get a quick quote.
Yeah, of course. So from our homepage, John, our loan officer, can you click on the non-QM quick quote? And ultimately what you're going to do is you're going to plug in your scenario once we get there.
Let's do a second lien, Jack. You said
second lien, you're going to plug in your second lien amount. So it's got to be obviously greater than 125,000. Your draw amount just needs to be greater than 100,000. For any scenario, make sure your HELOC draw amount is in there and at least 80% of your loan amount. Otherwise, you'll see that you will not receive an option for the HELOC down below. Okay, as John's plugging everything in. And then transaction type, obviously cash out, refinance, income documentation, 12 or 24 months business or personal statements, owner occupied, perfect. And as you see below, you'll see a HELOC option and a closed-end second option. And those are going to be your par rates with borrower paid compensation. Okay. It shows you your margin and everything you need to know with your rates. John, if you click the view rates option on the far right for the HELOC, you'll see a bunch of options below par. You can obviously buy down your rate if you would like. And then and this is also going to be the same process to submit your pre-qualification. This is very important because if you want your AVM pulled up front, you want your income calculated, and we do all of this for you. So don't spin your wheels trying to do it yourself or internally. Just send it over to us and we'll do it for you. And John, go ahead and click select there.
So Jack, a quick question: Is this locking the rate right now?
No, this is just a soft quote. This is actually going to be what the specific rate we're going to use for your ratios, for your DTI, et cetera. So it's important you select one for qualifying purposes. With that being said, you're not locking anything in until you register the loan through the portal. And it's going to ask for a MISMO 3.4 file. If you have one, you can upload it to this section right here. If you don't, no worries, just click next. And all I'm going to need is a PDF 1003 credit report and 12 months of business or personal statements to do your pre-qualification, just on the bank statement HELOC program.
So Jack,
And then below
another question. Sorry, another question we get. Let's talk about bank statements. We don't want any income on that 1003 because we're calculating the income for you.
Correct. Do not disclose it. Just input $0. That's perfectly fine. Leave your 1003 blank for the income figure. And then below you'll plug in. Oh yeah, go ahead, Chris.
You didn't pay for.
Yeah, I was just going to say one thing I forgot to mention on the DSCR and the bank statement cash out first mortgages. I don't know if I've ever seen rates so competitive compared to like a Fannie Freddie loan than now. It's just amazing. You'd be surprised how great the rate is if the LTV is like 75, 80. So.
Yeah, Chris, thank you for bringing that up. We're talking about cash outs and all things cash out, second liens. But because of the overlays that Fannie and Freddie have put on second homes and investment properties, our debt service coverage ratio and bank statement for second homes and investment properties, very, very competitive.
Very competitive. And not to mention, and again, if you're having issues with qualifying with DTI, even on the HELOC, we can always pivot to a DSCR program. More specifically, if you can't wash, because you can't wash mortgage payments for your investment properties on the HELOC, but then we can just pivot to a DSCR cash out. You take that equity and use that. Okay.
Great point. So take us through completion here, Jack, if you don't mind.
Yeah, of course. So you're going to plug in your specific, obviously where you work, your name, NMLS, phone number, email, and your borrower name. And then below, you're going to notice you're going to have you're going to plug in your subject property for the HELOC. This is where you're going to input it, and this is going to be the address that we're going to pull the AVM for. So make sure it's accurate, because if it's not going to give us it's not going to be able to run the AVM. If we can't run the AVM, then obviously we're going to have to order an appraisal. So make sure the subject property is correct in our system.
Yeah, okay. Great point. And then go ahead.
Yeah, and then below you're going to have your PDF version of your 1003. You're going to drag and drop your credit report, your PDF credit report. You're going to drag and drop. 1008 is not required. Just anything with an asterisk needs to have a document in there. And then if you scroll down, John, your bank statements. So this is where you're going to drag and drop your bank statements. And then at the very bottom, you're going to click submit. And then we also have the bank statement questionnaire. Typically, when you submit your pre-qualification, I'll send you a copy of the bank statement questionnaire. However, you can also download it from this screen as well. So if you click on that blue questionnaire button, you're going to download it just to give us a brief description of your borrower's business.
Yeah, and Jack, I remembered what I was going to say earlier. You were talking about, hey, disclosed everything to us. Jack and Chris and all our other account executives across the country are like your confessional booth. Tell them everything so they can make sure that there are no hiccups and all of your referral relationships or your borrower relationships is still intact. So tell them everything. If it's fallen out somewhere, tell them why. We just had an AE.
And I would say a quarter of the loans in my pipeline are loans that were not pre-qualified correctly at the competitor. And I'm getting the loan and trying to help them set it up properly for underwriting.
Yeah.
That,
Yeah.
that's
And we
an
have different,
unbelievable statistic. Sorry, go
yeah.
ahead,
And
Jack.
oh yeah, I was just going to say we just have different guidelines for each program. So a lot of times it might have failed, Chris, just because they structured under the wrong loan program, right?
Right.
It's like we can pivot different directions based off of, the borrower. So don't hold anything back when you call us with your scenario. Make sure we know it and all of its entirety so we can structure it correctly to get it through underwriting.
I mean, we're experienced non-QM AEs, and we didn't work for like a Fannie Freddie loan company and just got into non-QM. I mean, we have a lot of experience, so I really encourage you to tap into our experience. We know what we're doing. We can pre-approve your loan really well.
Great examples. Well said. So Jack, you mentioned it earlier, but I want to, so you get these bank statements. I think we had someone submit a bank statement for the review team, and within 3 hours, they're giving you
They're ready to
results.
go. Yeah. So ultimately, when guys, when you submit your pre-qual right here at the bottom right, you're going to click your submit. It's going to come into our queue. We're going to send it over to our bank statement review team. Get your qualifying income typically within a business day. Sometimes even quicker than that, just like John said a second ago. Sometimes within 3 hours. So the quicker you get us this information and submit your pre-qual, the quicker we can get you an answer. The AVM comes back even quicker than that. They run typically within almost about an hour, 2 hours, 2 hours at the latest, I believe, during the business day, obviously. So when you hit submit, we should have an answer for you within 24 hours and let you know, hey, you're going to qualify. Go ahead and submit your loan. Your loan is all structured. Let's get disclosures out and let's get to underwriting.
Yeah, and Chris, how quick is it for a debt service coverage ratio?
I mean, it can be in 15 minutes, so less
Yeah.
than that.
Yeah.
Again, but if something comes up and we see something, we're going to help you resolve it before we go to underwriting. So,
Yeah. So Chris, take us through uh, our marketing portal, which I'm going to go to the homepage here. I have it already pre-canned, but I want everyone to see the title on our home screen. It's Innovative Solutions for Underserved Borrowers, right? So, and I'm prefacing this because I think our marketing portal is one of the most underutilized portals in the mortgage industry, and it doesn't cost a dime. So, um, so Chris, Jack mentioned on the quick quote, you don't need login credentials, but you do need to be approved broker, correct, to
yes,
to, to
yep,
access our portal. So,
you do have to have your login credentials, which we can give you pretty quickly to get into our marketing portal. But I think the bigger picture is we're here to help you promote your business and especially non-QM. We've created all kinds of content, flyers, information so that you can go put your own logo on our flyers and market to your audience. So, for example, the one that you're looking at right now is a bank statement HELOC flyer that you can pass around to your relationships. I'll even say too that we do a lot of webinars. We can do a webinar like this for you or with you. We can do a presentation in person. Um, if you're presenting to realtors, I mean, I've done a lot of realtor presentations as well, where we've provided our own content and put your label on it, and it's amazing the kind of business you can get when you get in front of an audience of relationships like realtors or financial planners and the like.
yeah. So Chris, I brought up this ahead of time, so I just want to. It's going to take me so fill some space for me right now, Chris. So, uh,
Okay. So
yeah,
again, you log into our portal and you'll see all of the information, all of the flyers and the information. We also have presentation decks that we can give you. But my own experience is I've been in some of these presentations using our information and I've seen loans come out of it right away, especially if it's a realtor presentation. Sometimes the realtor in the room are actually going to start their own loan. So it's really a great opportunity. But once you log in, um, we have a lot of content. We also update the content all the time to make it just, as current as possible.
Thanks for filling that time there, Chris. So it got me to where I signed in actually. So, but you saw all the flyers that we have there. We have a flyer for every, excuse me, every facet of your business, whether you want to market to a CPA. And then we have, go ahead, Chris, talk about the social media posts we have here. And I'll scroll down while you're going through it. Can you see it, Chris? Is Chris muted?
I'm not sure.
All right, I'll go through it. So we've developed social. Go ahead, Chris.
Yeah, we also have flyers for social media as well. Posting on LinkedIn, Facebook, which we do as well, and we create that content all the time.
Yeah, so we have them delivered towards realtors or borrowers. We've done it all for you, and this is where I'll raise my voice a little bit because it's not used. You don't have to reinvent the wheel here. We've got images for you. We've got content for you. And Chris touched on it, and I'll go back up there. Presentations. Chris talked about doing realtor presentations. We go in there like it's almost like the witness protection program, right, Chris? You go in there, you don't say anything about Angel Oak. Nothing gets said.
I'm your investor.
We're just one of loan officer ABC. We're just one of their investors, and talk about non-QM to them. And if you get in front of 12 or 13 realtors, you will get one of their loans, whether it's for a bank statement loan. And you know why I know that? Because 9% of the loans we close underneath our bank statement program are actually realtors. Now, I can't tell you how many of them close in debt service coverage ratio because they don't put their job or income information on there. So this is a marketing portal. Use us. Use this marketing portal. Grow your business. Jack, anything else to add regarding marketing?
Yeah, I mean, I know a lot of people are using Canva, so sure, you can download these, edit them in Canva. You know what I mean? It's free marketing. It's free. Just
What's it
just
cost,
log
Jack?
in. It's
What's it
free.
cost? Okay, thank you.
It's free. So again, guys, you guys have access to all of this. Use this to grow and expand your market. Leave a footprint, and and we're experts. If you have any questions, I mean, this is what we're here for.
So Jack, we're getting close to we're basically that's all we have. So in closing, Jack, anything you want to share or just words of wisdom?
Yeah, I mean, just to become successful in your market, just advise, like anything that we can provide. I mean, just let us know, because I mean, we want you guys to be successful, okay? And in order to be successful, an experienced account rep is always an asset to have. So again, just use us and lean on us for any inquiries you have, because we'll be able to give you good and expert advice.
And Chris, anything in closing?
I would just say if you haven't done a non-QM loan, specifically like a bank statement HELOC, give us a shot. You'll be really pleasantly surprised in how smooth the process goes. When you're not using a tax return, I know it's new and different, but we know this business extremely well.
Yeah, and we're going to calculate that income for you up front, so that we make it really pretty turnkey. So in closing, thank you for attending. Sorry about a little bit with the technical question box, but thank you for attending. Hopefully you receive some value out of this, and we can help you grow your business. So this is being recorded. We will get this out to you before end of day tomorrow. So thank you for attending. And if you've closed a loan with Angel Oak, thank you for your business. If you have not, you can tell we have very, very experienced account executives who will hold your hand through the entire process. So thank you for joining us today. Have a strong end of your month. And the second half of the year is right around the corner. Let us help you grow your business. So on behalf of everyone in Angel Oak, thank you for attending today. Appreciate it.